Hi, everyone. Welcome to Facebook Live. We have Rob with us here. And Rob, why don't you go ahead and introduce yourself and your company to us, and then we'll get right into the topic of the day, which is long-term care.
Great. Thanks, Laurel. My name is Rob Cunhs with Transamerica Financial Advisors. And like name says, we help people and businesses with financial planning and taxes and retirement and all the good stuff, including long-term care, and to help people have not to have to worry about money so much.
Yeah. Long-term care is kind of controversial. And people are always like, some people are on the pro side, some on the con side. So I leapt at the chance to have this conversation with you. Just to kind of let everybody know, I got it when I was 45. And I did a 10-year pay, and so I have it for my family. So obviously I believe in it, I feel really relieved that I have it. But I want you to talk about it from other people's perspective. Okay, so how do you pay for long-term care without breaking the bank? That's right. The first question there, right? And what is long-term care?
So first of all, long-term care it falls under two categories. First is if you have any kind of cognitive issue, Alzheimer's, Parkinson's, dementia, where you basically are no longer safe to live by yourself, and you require, even if it's just a part-time care, that's important. The other form of long-term care is when you can't do what we call 2 of the 6 activities of daily living. And so that's, if you think about your morning routine, it's being able to get out of bed, being able to walk to the restroom, okay, being able to go to the bathroom independently, then being able to take a shower, then being able to get dressed by yourself, and then being able to go to the kitchen and eat breakfast unassisted. If you cannot do any 2 of those activities, you qualify for long-term care assistance. And then who needs it? Well, bottom line, 70% of people over the age of 65 are going to need some form of long-term care before they pass. And with our population that's aging right now, it's really important. However, 40% of all long-term care recipients are actually under the age of 50. Okay.
Really?
Yes, between 18 and 50, 40% of them. In fact, I was in that situation with my wife. My wife had stage 4 colon cancer, and I was her caregiver. And we had made all the excuses about life insurance and long-term care. It's too expensive. We're too young. We're too healthy. We don't need it. And I learned it's better to get it 10 years too soon than need it 1 minute too late. At the time, I was just working in real estate, but I wasn't able to work real estate because I was taking care of her as her caregiver. And this created a financial burden on our family. So I want to be a word of warning to, everybody out there to don't repeat my mistakes, because it is that important.
Okay.
And, and like I said, why is it important? Because, with everybody needing long-term care, and, as people get age, a lot of people, they rely on their family and their kids to take care of them as they age. Well, in order to provide that care, and this was me, is they either have to A, cut their hours back at work, or B, totally quit their jobs so that they can take care of that loved one. And this creates a financial burden on their families. So, and if it gets to a point where the elder can't be taken care of by their family member, well, now they have to go into a nursing facility. Okay. And here in California right now, most assisted living facilities cost in the range of 10 to 20,000 a month. Okay. And most families don't have that. And as a result, these families, the elder usually has to go spend all their resources, thus leaving nothing for their family. And once they go completely broke, that's the only time that they qualify for either Medicaid or here in California, Medi-Cal. And so it is super important to get it done early, because as a result, Washington State already passed a long-term care tax, okay, on all W-2 earners. California, New York, and Pennsylvania right now all have legislation in process, which is being expected to be voted on by the end of this calendar year. And in Washington State, it's a 0.58% of your income. Okay, but it only gives you $36,000 of coverage. In California, it's expected to be a little bit more than 0.5%. They're looking at maybe 1% of your income, but it still only caps out at 144,000 in California. And so that's maybe 6 to 12 months of care in a nursing facility. And as we know, people with Alzheimer's and dementia, they could actually live, in a nursing home for years. Okay. And, and lastly, government ran anything is really not that great. So, it's better to have private long-term care insurance. And because in Washington, if you had it in Washington, but you leave the state, it doesn't follow with you. It's not portable. And so that's a big thing.
Right. And then, if you get Medi-Cal, it's not the greatest places either. It's not that much of a thing. And you have to only have like $1,600 a month in income. So if you have a pension or something, you don't qualify for that. You're kind of like in that sandwich thing too, right?
Right.
So here's my question, Rob. We're talking to a bunch of professionals mostly right now.
Mm-hmm.
When is the best time for people to get this kind of long-term healthcare insurance?
I always say we're never going to be any younger than we are today. Okay. Now, so I would say the younger, the better, because it's better to get it when you're healthy. Okay. That your premiums will be less. The younger you are, the healthier you are, the more fit you are, it reduces your premium. If you wait until you're in your 40s, 50s, or beyond, we're not always in as good as health as we were back in our 20s and 30s. So, and the thing is yes, you may not be using it those early years, but as I said, 40% of long-term care recipients range from 18 to 59.
I mean, car accidents, work accidents, cancer. There's a lot of things that can take out and have you. And this stuff pays for people if you just need care in your home, right? Yes. Caregiver to come to your house, maybe 8 hours a day or something while your loved ones do work or whatever, right? I mean, it's pretty flexible, isn't it?
And now today, yes. And just in my own situation, I was my wife's caregiver, but I wasn't getting any money because we didn't have long-term care insurance. And, even if extra $500 or $1,000 a month from long-term care would have reduced my stress levels and financial burdens on the family. And so you're never too young to start getting it. And, and better to get it when you don't need it. It's like the bank, they don't give you money when you're broke, or get a loan. They give it to you when you already have money and you don't need it. Then they're willing to give you loans. And same thing here. You're better off getting it now while you're young, while you're healthy, and the premiums are still low.
And even if you're a little bit older and maybe have a couple of health issues, you ain't getting any better than this, right?
Right. Like I said, you'll never be any younger than you are today.
Mm-hmm. And like I said, I got it when I was 45, and I did not get the cheapest rate because I was heavy.
Yeah. And so, so the thing is get it now, protect your family now. And, I have a friend, that she's in her 30s. She got protected and she just gave birth to her second child, and in doing the C-section, the doctors found that she had ovarian cancer, and which they removed, but she's going through chemo right now, and her husband has a job, and thankfully to the living benefits that came with her policy, they are now getting some form of income to offset his loss of income and to offset the time that she's not able to work and the treatments.
Awesome.
And like I said, even as you said, even if it's just somebody that comes in part-time 1 or 2 days a week to help with cleaning and meals and, you know, a little bit of housework, that's okay. It's a lot of people are getting what they call indemnity, where you basically, they just say, here's your check, do whatever you want with it, take care of yourself. Some
right,
are
and there's different kinds of that,
reimbursed.
right? There's some that'll pay the facility directly, some that'll pay just hand it to you. I know I have a per day thing on mine.
Right.
Other people, you know, others are per the month or up to a certain amount. And they want you to expense it. There's all different kinds, and that's why you really need to talk to somebody who knows this product pretty well. And it's always changing, because I know the kind of policy I got with a 10-year pay is not even available anymore.
Right.
And some of them have limits. So you got to know what you're buying, right?
Right. And, you know, and that's what we do, is we help people. One of the things we do is we do a free complimentary personal financial strategy, where we look at the big picture, not just insurance, but we look at your whole picture. And then we come up with recommendations that are suitable to each person in the family, and so that they're not caught off guard like I was. And I wish somebody like me would have talked to me 10 years ago. And, you know, and like I said, you know, you may think it's too expensive or that you're too healthy, but consider the alternative.
Right. Again, you know, people get breast cancer, brain cancer, accidents, even in their 30s. So this is never too young. How do they reach you, Robert?
So my number's on the screen. They can call me directly at 916-616-9675, or they can visit my website, robcunha.com, and on there's an appointment scheduling page. And if they would like to leave a note, like what they want to talk about, whether it's long-term care, retirement, you know, protection for their family, or even college funding for their young kids, we can do all of that. And like I said, I don't get paid to talk, you know, so there's no consultation fees. I only get paid to solve problems and help people with their financial situations.
Right. Well, thanks, Rob, for coming. Thank you all for joining us. You know, if you have a great topic that you would like us to speak about, you think that would be great, we really appreciate your feedback. If you have any questions, you can always put them in the chat box here. Even later, you can do it on the comments on the social media, and we'll get those questions to Rob for you. All right, everyone. Thanks for tuning in.
Thank you for having me.